Hey everybody, it's Steven. I'm here today because I wanted to take part in an event going on Publish X. Um, they're doing a project to take a look at the Statera Project and make a video or write something up for a chance to win some Dai. And I like to take part in these kind of little contests every once in a while, and sometimes you get to take a look at a gem of a project. Statera is a very interesting project. So the coin's been on quite a little bit of a run recently, going up realistically from in the last couple of months from just around a penny all the way up to 14 cents. So it's been going up quite a bit. It's had a nice run. To pick up this coin, you would really use Uniswap. It's, as you can see here, you can get it these places, but the majority of the volume is over here on Uniswap. It's kind of the idea of the coin. So let's go ahead and take a little bit of a look at the idea behind Statera. This is a pretty technical coin. It's kind of hard to understand, but I'm going to break it down the way I understand it. And if I'm wrong at all, I hope somebody corrects me. I've read through a good amount of the information, watched a few other videos of other people's explanations. I feel like they leave out some things trying to be too technical. But the idea of Statera is that it's a deflationary currency that gets burned at 1% anytime any of it is moved anywhere. So the coin will always be going down in supply, which helps in theory to drive price up as long as there is demand. There does have to be demand for that to work. If nobody wants the coin, it doesn't really matter that it's getting burned. So then the thing about that coin is it's part of this overall project where they're creating an indexed fund that uses that coin in their index fund in a kind of roundabout way that gets so technical it worries me a little bit that people won't be able to understand it, follow it, or completely understand why they're doing it this way. But the idea behind it is they have an automated AI balancer. Now this part is pretty cool. That is going to create an index fund, and it's always going to keep an even amount of a ratio of the cryptocurrencies. And that allows them, trying to find where they show you the ratios. Here it is. That allows them to always hold these Statera / Ethereum, which is the Delta token, regular Ethereum, Bitcoin, Chainlink, and synthetics in a ratio of 40, 30, 10, 10, 10. So their index fund is always going to be at those ratios. So the idea is, and that's in the value of the overall thing. So if let's say Bitcoin goes up 20%, right? Then they're going to say, okay, Bitcoin is now the value of our Bitcoin has moved up to say 14% of our portfolio, and it's pushed down the Delta token to 38%, and this one down to 29, this one down to 9, this one down to 9. So we're going to sell off those 3% Bitcoin gains. It won't exactly be 3%, but we'll rebalance everything down where we sell off Bitcoin, buy up a little bit of all the other tokens, and when we buy up those tokens, then we're going to end up back at a 40, 30, 10, 10, 10. And the AI will constantly be doing this. It'll constantly be selling whatever coin moves up to go pick up the other coins, and then move and repeat that process over and over again, which creates demand in all three of these tokens. Because if anything starts going down in value, it works the same way, that they would start going to buy that token because it no longer is holding 30 or 10% of the portfolio. So the computer will always be, the AI will always be buying and selling these 5 tokens to rebalance themselves. So this is the part that is really unique. The part that I don't fully understand, and I'll be a little critical of, is why they need the Delta token. So if somebody can explain that to me, why this just isn't Statera. The only reason I can think of is Statera's deflationary, being burned at 1% and putting it directly into the bot. They were worried they would limit the supply too quickly. So that's why I'm hoping they created the Delta token, because the Delta token seems a little bit unnecessary, but this is how the Delta token would work. It's the actual token that is in the pool. They call it the Phoenix Fund. So if you want to get into this fund, you need to supply liquidity through the Delta token. So that's how they get people to bring money in. The Delta token is considered a split of 50-50 Ethereum and STA. So if you go over here and you look at coming into it, you add liquidity through Uniswap, and you have to do a 50-50 split. So if you wanted to put ETH in, they actually want wrapped ETH. But if you wanted to put it in, you would have to add 10 wrapped ETH and 25,000 of these. So it's a total of 20 wrapped ETH versus of an investment. So maybe you'd be somebody more like doing if you had 4 ETH and you wanted to get in, or even 1, but you'd have to match it up, double whatever you wanted to put in. So if you really wanted to put in just one Ethereum total, you'd have to put in 0.5 Ethereum and 1200, almost 1300 STA tokens. So this is where you get some of the demand. Anybody who wants to get in is going to have to do this. They're going to have to put these in, get the Delta tokens, and then provide that into the pool. And then if you go over here and you look at the pool, this is where you can see on Balancer what their pool is at. So their pool is currently at $261,000. They've done $48,000 in volume in the last 24 hours. And I'm not invested in this. I just started looking at it today. I'm going to look into it more, and I might put some money into it. But you would see, if you were invested and connected, you could see your share of the pool. So the idea here, as you can see, is they're keeping these ones at these weights. They have this much Delta tokens. So that's 3,000 Delta tokens, a little, almost getting closer to 8. And then they have 200 Ethereum, they have 2 Bitcoins, they have 1,800 links, and then this is the synthetics token. As you can imagine, they've had a lot of, they've probably been selling off a lot of Link off of the run it's been having, and maybe picking up more synthetics, picking up more of the Delta token, picking up more wrapped ETH and Bitcoin. And so these numbers are always going to fluctuate, trading back and forth, kind of basically taking advantage of arbitrage trading between these, right? If you're constantly selling your Bitcoin to get more Link when Link is going down, and then selling your Link to get more Bitcoin when Bitcoin's going down compared to Link, at the end of the day, you're going to have more of both of those two. These numbers will just keep going up. As long as the AI performs well, the numbers of each of these things should just keep going up, not only from people adding more liquidity, but just from the arbitrage trading that is going on between the two. So the way I look at this, there's 2 ways that you can try to make money off of the Statera coin that are very, very obvious. There might be some more, but I haven't been able to think of them yet. If you just buy it and hold it, and the project is successful and the balancer pool gets big, then the value of the coin is going to go up, because people need to get the coin to be able to get into the pool through the Delta token. Because the only way to get the Delta token is to invest both Statera and wrapped Ethereum. So it has if you want to be in the pool, you have to have Statera. So if I'm holding it and enough people want it, the value is just going to go up until I'm ready to let it go to them to invest into the pool. The other way to obviously make money with the project is to actually use the Statera and wrapped ETH to get the Delta token, so that you can get into the Phoenix pool and then have an index fund that over time should continue to grow, just like traditional index funds in the stock market. The one thing about that is you have to believe in these projects. These are pretty solid projects. I think most people like synthetics, Link. If you're in crypto, you like Bitcoin at least a little bit. And Ethereum, these are really the 2 flagships. The Delta token that brings in the Statera is really just to because it's their project, right? They created the AI, they created the system that's going to be doing all the trading. So if you want to be in this project with them, you just have to believe in their token a little bit as well. Personally, for me, I'm probably looking at just doing an investment in the STA token and then waiting for it to go up in value, because I'm not sure I want to get involved in this liquidity pool, because there was a hack once before that they believe that they have fixed. I heard about that one. Basically, somebody tricked the system by doing a lot of trades and drained all the liquidity out of the pool. And then the plain fact of the matter is, if you just had one of these projects get hacked, it could mess the pool up. Let's say Synthetics dies as a project and it falls off of a cliff, and the team is a little bit slow getting Synthetics out of the pool. All of a sudden, when this starts tanking in price, it's going to start selling off all of these other assets to go buy more of this asset that is falling apart. And while these 5 projects are very good, since there's only 4 legitimate projects in here besides the Statera token, which luckily that one, while the pool is running, I don't see how it could go down too drastically in value. But, and you'd have to, and we all kind of believe in ETH and Wrapped Bitcoin and Bitcoin, and Link as the first mover in the Oracle field has been going crazy. But it's the same thing. If Link decides to massively adjust down to like $5, then the portfolio is going to readjust. It's going to sell off all those other things and buy a whole bunch of $5 Link. And if Link never goes back up into the $12 and $13 and $14 range, then you're going to be in trouble. Index funds are required for the market to move up to do well. If the market starts to go down drastically, it doesn't matter. And traditional index funds trade much bigger companies, and they will move companies in and out of it. Like the S&P 500, they'll add companies, they'll move companies. And so right now, with just these 4 in here, I'm a little hesitant to get in. I'd like to know what you think, though. Are these projects stable enough for you? For me, Link and Synthetic are just so new. While they both have been doing really well recently, and DeFi is really hot, and the Oracle space is really hot, and Ethereum has been doing really good because of DeFi, and we all love Bitcoin because it's the first one out there. There's always the chance that any of these projects, Link has some major problems. It causes some people to lose some money because it has bad Oracle feeds. That falls apart. ETH 2.0 gets delayed, and then that goes back down. Synthetics, I feel a little bit safer that I don't see any big scary things in their future. But that's why for me the pool is not where I'm ready to put my money. But the STA token seems like a safer bet, because all you got to do is buy it, hold it, hope that the pool does well, and then you'll make money. You won't make as much money as people in the pool, but you will make some money. One other thing that they do is, if you are in the pool, you do get some token drops of the balancer token. That's one extra thing that I don't fully understand why they added that in, other than trying to give you one more incentive to get into here. I don't know the full utility of that token yet. It's not really in here that well, but it is something I have heard people say that you get. So if I'm wrong on that, I'd like somebody to let me know. Overall, this is a project I'm going to watch. I'm probably going to look for an entry point on Statera. It's had a big run. I don't know if I'm going to get into it now, hoping that it just keeps running, because a lot of stuff has been doing that, or if I'm going to wait a little bit longer. But I hope you liked my little overview of this project. Again, my name's Steven, and I hope you all have a good day. Bye.